everyone, welcome to Road to the Millionaire Retirement. My name is Andrew and thank you again for checking out this channel and watching this video. So in this video, I want to go over what my plan is as the stock market has been going down for the past few weeks. And I'm going to show you my portfolio history for the past month. Looking at this month, the last time my portfolio has stopped going down is February 8th. Prior to this, I believe it's been going up almost consistently. After this GameStop break, it has been doing pretty well going up. But looking into 1 month period, after the February 8th, it has been going down almost consistently with a few increase. So we're gonna do a quick count. Alright, so that's the first gain and been going down for a few days. Second gain, very little, but it's a gain regardlessly. And going down again, and third gain, and a drop here, and going down, and fourth gain, and another drop. So roughly within the past 3 weeks or so, the portfolio has gone down every single day except fourth time. So I feel like this might be an event maybe that it's gonna keep going down. I know from this period, the February 24th to 25th, from what I remember reading, I believe that the investor was pulling out of the investment and going into bond because they were scared of where the market was going. So they were seeking a better safe return on bonds, and that's what kind of made this happen from the articles that I read and from what I heard. I'm not a professional, so I don't keep track in details of everything that goes on in stock market and what happened that can affect stock market. It's usually everything that happened afterward that I read about it and find out, oh, okay, so this is what happened. So this drop right here is apparently the cause of that investor pulling out of their investment and seeking more secure investment, which is bonds. So that's why the stock market kind of got scared, and this increase is when the bond kind of went down a little bit and people were back into investing. And today I don't know what's going on, but we're down, not a lot, but it is a down, it is a loss. So I just want to go over like what my plan is with my each account, so that way it's to share you guys my journey and what my plan is to get to that millionaire retirement. So the first account that I want to go over is my brokerage account that is only consists of ETF. If you guys don't know what ETF is, it's basically how I would say it's I don't want to say it's company, but it's a share that holds different company share into that share. So we'll look at the VOO. So VOO is a S&P 500. S&P 500 is basically top 500 of US company, and so VOO holds a shares of top 500 US companies. So we're looking at like Apple, Microsoft, Nvidia, Johnson and Johnson, Home Depot. Like any big top 500 company that you could probably think of is probably be within that category of S&P 500, and VOO have fraction share of those company, all those 500 company within this one share, I guess, within this one ETF, so to speak. So what am I gonna do? I'm not gonna do anything with ETF brokerage account if the stock market keep going down. Like I'm not gonna be selling them because ETF I feel is a lot. It is a lot safer investing than an individual stock, because like I mentioned, it's not just one stock that the ETF carries. It's a multiple companies. So even if one of the company decide to go bankrupt, you're still gonna be okay, because you have all this other company, like more than 99% of companies that make up for these ETFs. So if anything, I'm definitely gonna buy more Haven't decided if I'm gonna be buying any of these four. I might be buying new ETF into this, but if the stock market keep going down, I will definitely buy more ETF or any of these for sure. My next account is my Go Nut account, which is my option trading. So basically, this option trading is my high risk and high reward account that it was basically a gambling account just to see if I could if I could get lucky and make some big bucks. As you can see, it hasn't been doing so well with negative 79% on Nokia call and negative 31%, which I purchased today on the UWMC. Fortunately, Exxon, oh excuse me, Exxon has been doing pretty well, thankfully. Um, I think I bought this because the past 10 months, Exxon has been going up steadily, and I've looked at it and been like, okay, you know what, Exxon might be coming back, bouncing back from their COVID fall. So I'm hoping that this will pay off really big because I have 15 contracts, which is a lot more than I have which is more than any amount that I purchased before, and well, finger crossed. But going back to the subject, what am I gonna do with this account if the stock continues to fall? Well, if anything, I'm just gonna be losing the money that I initially invested, which is right here. So these are the initial investment I did, $96 for Nokia. It's only $96 loss. For gambling, I don't think that's bad. And also comparing to the amount of portfolio that I have, 167, it's not that bad. The most I can make is limitless, but the most I'm gonna lose is what I put in, which is 167. Exxon, I did contribute a little bit more because it's a company that I know. So I'm hoping that this will pay off. It's already up 55%, which I'm very thankful for. I think at one point it was over 100, but with option trading, it could really blow up a lot more than like couple percentage. It's not like stock investment. I'm not gonna go over in detail what the option trading is because I'm still learning as I'm going, and I don't want to misguide you guys into something that I'm not right. So if anything, I would highly recommend just self teach your option trading account like I did and start small and just learn as you go because that's what I'm doing. I think that's perhaps the best experience. But also, as you are learning, always keep an eye out on other just keep learning as you're learning by yourself, because it might help you open up a view that you haven't seen before. So again, I'm sorry guys, but going back to the subject, what am I gonna do as the stock market goes down? Nothing. Yeah, so that's what this account is gonna be doing. Nothing basically. Alright, the last account is my Roth IRA. This is my portfolio. This is my retirement account. This is where most of my portfolio is focused on, which I believe is like 75%. So what am I gonna do with each of these individual stock? Let's start with the Microsoft. Microsoft, would I sell it? No, it's not Microsoft. I have big faith in Microsoft, and as you can see, it makes up 28% of my Roth IRA account. I Why do I have such a big faith? Because I like what Microsoft creates, and it's a tech company, also one of the top three biggest market cap. I don't see Microsoft doing bad going forward. If anything, it's just gonna bring down a little bit, but I believe that Microsoft will continue to go up. I'm not gonna go in detail with every one of them. I'll just tell you guys what I'm gonna do with each of these stocks. Apple's Apple has been disappointing, to be honest. After I bought the share, it hasn't really gone up as much as I thought it would. Because prior to me buying Apple, it was doing really good and it was going up. But at the moment, I'm gonna hold on to it. But there is a chance that I might sell this because I have been thinking about it. So we'll see how that goes. Best Buy, I really like this Best Buy company. I want to hold on to it, but we'll see how much it drops because if I'm right now it's I'm at 60% gain. If this drop maybe 25% down to 25%, which is a lot, I might sell it then because maybe it might be dead by then. and it also paid dividends, and it's a good dividend, so I'm gonna still hold on to it. PRU. Now, what is PRU? I think this is the I think PRU was. Ooh. Okay, so the PRU is the financial. Sometimes I don't know what I purchased at the time. I mean, I know what I bought at the time that I bought them because I researched them, but like now I kind of need to look it up because I forgot, or it's not something that I keep a close look at. So this is PRU. It's insurance. Insurance. I think I'm probably gonna hold on to this because it paid pretty good dividends, over 5%, which is a lot. And it has been doing pretty well. It's been going up since the COVID, and it was down like $40, and it's up more than 100%. So I'm gonna hold on to this a little longer, and I'm already at almost 60%. So I'm gonna hold on to this and wait it out. AMD. Now this is a dividend stock. I mean, I'm sorry, this is a stock that doesn't pay dividend, but I'm gonna hold on to this for sure because AMD make processor for cell phones and for computers and for video games. And not only are they making processor, but they also make graphic card for the PC. So I'm very confident in AMD, like Microsoft. Even though they don't pay dividend, I'm gonna hold on to them because I know going forward in future, AMD is gonna continue to thrive with their competitive OLED being in Intel, which only make processor, and Nvidia, which only make graphic card. AMD, I feel, is in pretty good hand, and I'm already at 71%. And even though it was up high as $99, and we're looking at $16 drop from that high, I believe AMD will, do well down the road going forward. So I'm not really concerned about AMD. Now, Southern Copper Corp. I believe this is a mining company. I recently bought it back in, when did I buy this? Purchase history. So late January. I mean, I bought, so this is like month and like 2 weeks, and I'm already at 12%, and this pays pretty good dividend from what I remember. So I think I'm gonna hold on to this. If this reaches maybe negative 10%, I don't know. Like, I don't like selling stock when they reach negative percentage, but maybe if I wait till like maybe like 5%, maybe then I'll sell it. As you can see on the chart, it has been going up really well, and the dividend pay is pretty good, over yeah, 3%. So I'm gonna hold on to my Southern Copper Corps. The next is TD, which is a bank, Canadian bank, and I'm gonna hold on to this for sure. They have been doing pretty well. The dividend pay is also great, and it's not a growth stock that it's not a company that I'm holding on to for the sake of growth, but for that dividend. They pay pretty good dividends, and they increase their dividend every single year. And this small growth is just the cherry on top, so I'm gonna hold on to that. APM is a financial. This it's a financial, but it has a difference. Oh, let's see. No, I'm sorry, wrong one. Market capital. Okay, so it's a market capital industry. I know I have financial, but it's not in the same industry. So, and also APAM has been doing pretty well, as you guys can see in 1 year growth. Even going back to 5 year, I think it's doing pretty decent. The one of the reason why I really like this stock is because of its dividend, which is 8%. I think it's one of my highest dividend pay. And considering that high pay, and they have been increasing it pretty frequently. Yeah, I mean, like, this is very irregular, but it has been paying pretty decent throughout the entire time, I think. So this is APAM is a share that I'm a stock that I'm gonna hold on to for sure. And it's already at 80%. I think at one point when it was at 54, it was over 100%. So I feel like they'll do okay. I'm gonna hold on to it and wait it out. Next is Neo. Neo was it's an electrical vehicle from China. I had a high expectation. I'm a little disappointed how this is unfolding. Negative 25%. We'll see, guys. because I could definitely use that money for that dividend stock that I have on my watch list. So this I might sell, yeah, I might sell dividends for the dividend stock, We're gonna see how it goes. The next is a Fidelity National Financial. I think this is another insurance now that I think about it. Let's check it out. Yeah, another insurance. I think I made a mistake and bought this because I didn't think I was looking into my portfolio. Because if I looked, then there was that PRU, which was insurance. So I have two insurance. I'm not really comfortable with that, but it pays a pretty decent dividends, 3.66. But I could probably sell this and buy my watch list dividends, which I'll show you guys after I'm done with this. So I mean, it's up 6%. I'm not. So I might hold on to it a little bit longer. We'll see. But I'm not. I don't think I'm gonna be holding on to this in the long term either. The next is AT&T. AT&T is basically a dividend stock. It's not a stock that you expect to grow. Negative 2%, that's completely fine. I'm gonna need to buy more to make that 88 to 100 because I have that OCD where it needs to be that even number. So that's definitely gonna be changed, and I'm gonna be buying more when I get more dividend from the stocks. But AT&T, I won't sell it. If I do sell it, it's only temporarily to buy other stock, and I would definitely buy AT&T back 100 share, at least 100 share. AT&T is a dividend stock, and even though they go up 1 cent per year, they are always almost guaranteed compared to any other company stock throughout the crashes and dips. So AT&T, yes, I'll hold on to it. Now the rest of these four stocks, these are the high risk stock that I got into on the impulse when the GameStop happened. And as you can see, it's doing terrible, terrible, and I have been losing, I want to say like almost 3,000, like 17, yeah, more than 3,000, like a little over 3,000. So it's down little over 3,000. Now, because this is not an option, I don't have to sell it by a certain date. AMC, I want to believe that AMC will bounce back up when the whole COVID is completely over and it's back open. I will sell AMC then because hopefully by end of the year it'll go back to at least being what I pay for, which is $18.88 per share. Now, as for Blackberries and Nokia, I honestly don't know like what's gonna happen with these because I don't think there's any future plan that I know at this time that's gonna make them bounce back. But at the same time, I'm not really. I don't think I'm gonna sell considering how much I have lost, 45% on almost 45% on both of them. So we'll wait and see how these unfold. I don't think they're gonna go any much lower, but hey, I could be wrong. Alright, the last one is I believe it's a pharmacy for marijuana. I only invest 241, so I'm just gonna let it ride whether it goes up or down. I really don't care. I'm just gonna see how that unfolds. Like so, this I'm just gonna completely assume like it doesn't exist. Alright, so now let's show you guys what my dividend stock that I want to purchase. So I have two different stock that I want to purchase, and those are the VC property, which is real estate, and the next one is a BCE, which is communication service. As you can see, the BCE has a really high dividend, 6%, and VICI has a 4.63, which is higher than average by my book. So these are the two companies that I want to invest for their dividend purpose. Looking at the FNF, it is lower than these two, and it's about the same price as, well, it's not that far price from BCE, and I could definitely buy more with the VC. So I'm like looking at this chart, I might sell this stock to buy this. I know I could buy. I want to get 100 share of this, so maybe by selling this at around this price, maybe I could get maybe like 75 shares, and hopefully finish the rest by next year when I get more money in for the contribution. As for BCE, I might end up buying 50 considering the amount of share. But depending on how it goes, these shares might cost a lot more. So we'll wait and see. But that's gonna be my plan for my account. Hopefully it makes sense to you guys. If not, I'm sorry. But hopefully, nonetheless, you guys enjoy it for the sake of entertainment or for education purpose. So thank you for watching, and if you guys have any question, comment below. If you guys have any comment that you want to write, comment that below. I'll reply it as whenever I can. And good luck on this week's stock. Not even this week, maybe this month. Coming up this couple weeks. Good luck on the stock market because I think we might need it. All right, thank you.